Nick, why don't you talk a little bit about when a contractor is looking at their financial statements and evaluating their WIP, things to be mindful of. Obviously, they want to present a strong financial statement for lending or bonding, but things that you're looking at as you're working through a financial statement.
Yeah, WIP schedule is probably the most important financial piece of information. The real things that we try to dive into to reconcile as much as possible, obviously, depending on the review, most companies will receive a reviewed financial statement, which is basically analytics and inquiries. So the biggest things that'll swing your WIP schedule are your estimated cost at completion, your total cost to date, and your billings or your billings. Okay, so we want to make sure that those are all accurate as far as year end and kind of reconciled to your general ledger for revenue and costs. As those adjustments swing into your over under billings, which swing your revenue, and they can do it massively depending on the size of your WIP schedule. But those are the primary focuses for us during our review process.
Yeah. And on the tax side, depending on the size of your company, long-term contracts, if you don't have any contracts that are long-term, which generally are exceeding 2 tax years, there's a whole host of options you have. You don't have to follow what Nick's talking about, which is the percentage of completion, where you're evaluating estimated costs and recognizing revenue through over-under billings. You have the cash method available to you. You could be on a cash basis. You could be on completed contract. If you're long term, you got a ton of options. If you have long term contracts that exceed 1 or 2 years, if you're a small business taxpayer, those cash basis method, completed contract, those are all available to you as well. Those are usually advantageous. Completed contract, you're not recognizing revenue that Nick's recognizing on the financial side until those contracts are 100%, well, really 95% complete. That allows you a deferral opportunity on the tax side. Similar with cash basis, if you're a small business taxpayer and you're able to take advantage of that, you're matching revenue on the tax side as you receive it. So receivables, over under billings, things like that are, we'll call it accrual-based accounting items. We're not recognizing that for tax. So that's another great opportunity to defer revenue and not pay tax on it till you have the cash in the door. So you may have a strong financial statement based on your percentage of completion and your WIP schedule and all of the things Nick talked about. You really want to evaluate on the tax side, am I able to take advantage of some of these other opportunities, maybe show less income on the tax side, pay less tax, have less cash going out the door, which in turn helps your financial statement as well. So you can still show a strong picture to the banks and then pay less tax, which again, less cash going out the door. The banks like to see that. You have to be mindful with these methods, if you do use these methods on the tax side, that if you are subject to the alternative minimum tax, that you're required to follow the percentage of completion like you do for the financial statement. So that revenue deferral is not there on that side of it. It can kick you into the AMT tax, which can bite into some of that tax savings, but the positive of that is that's a credit. So if you have to pay AMT tax, I can get a credit later on against my tax. So just some things to consider. You definitely, if you're getting reviewed statements, want your audit and tax people working closely together so that you can present that strong financial statement, and then you're also evaluating those deferral opportunities on the tax side to help yourself from the cash flow standpoint.
As far as how we go on the review side, we have to recognize revenue as it's earned. That's where, Rich, you're speaking about the percentage of completion. That's why the WIP information is so important. But that allows you the benefit or the ability to then, circle in tax planning, right? Where you're able to, look at the numbers from a accrual basis and then evaluate if a change in accounting method is necessary, or, if we're in the best position of where we're standing to remain on that fact and carry forward planning that way.
Yep.
So again, the WIP schedule to me, I've been handling contractors. It's pretty much been the only thing that I've focused on. It's the most important financial piece of information. So if you don't understand it or want some more tips, obviously feel free to reach out to Bowers. Me and Rich will be glad to spend some time to help instruct and give some tips of how to prepare and make sure that it's accurate so you're getting the best result possible.
Yep, and we've changed a lot of methods for new clients, new contractors coming in to get them on these more advantageous methods where it makes sense. So.